Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Yeah.
What is good? What is good for the culture family? And welcome to the live stream. Let me just do one quick thing before we get started here, and then first thing I'm gonna be doing is muting this. Let me just do one quick thing before we get. There we go. All right. No need to hear myself. There we go. Okay, so we got the chat up. We got the YouTube rolling. All right, so I'm trying a different camera angle. Y'all gotta let me know. I got my let me see. I don't know how much of a fan of it I am though. I don't really think I like that all too much. But we're gonna have to make it do what it do. You know what I'm saying? I'm not the biggest fan of it, but we're gonna get this stream background right. But anyways, so let's dive into the markets. Let's go to TradingView here. All right, so what are we looking at here? It's currently 9 o'clock, so per usual, we gotta go ahead and see. And I'm gonna break down the trade I took last night. I took an L on a trade that realistically just wasn't worth trading. Both with how at the time that it happened. I'm gonna break that down at the time that it happened, and then the volume was just so low. It wasn't worth it. And realistically, I sacrificed my sleep for it. So I went to sleep at like 12 o'clock, sometime past 12, and then woke up at 4:30 to go to the gym. So not only did we take a losing trade, but I sacrificed the sleep. The trade I can get back. The sleep, you can't get the sleep back. But it's okay. We're up and active. So all right, let's look at EURUSD on the 4-hour time frame. Let me see. I was too close yesterday. On the 4-hour time frame, price just closed as a bearish candle. So price closed as a bearish candle. What did it do? It broke through this low here. What did the previous daily look like? The previous daily closed bearish at a resistance level. It's likely that we have some resistance here. That's where we have some resistance at. So all signs right now are showing signs of a bearish market structure that we can see. So where is our key levels at? So if we're looking at this on the 1-hour time frame coming off of that 4-hour bearish candle close, you can see prices creating lower lows. This is a high here. Hold on. So the low, high, new low, new lower high. This becomes the key high. Breaks through that low. This now becomes the key high. And we got a shallow break, so it's likely a potential steeper correction that can come up there. One thing that I will say that I'm not loving all too much is the fact that our key high up here has no top wick. So the fact that it has no top wick, not really too much of a fan of that, but you can just see how price closed on this bearish time frame. And if we do in fact get a break above that level, we could see a change of character similar to what we seen kind of happen last week. You can see price was started to push down. We had a nice impulsive move down. Then we started to range off. It was very, very low and slow in terms of volume. We were still able to capitalize, but it was low and slow. Then what did we see happen? We had a break of that key high. So price was creating lower lows, a low, a high, a lower low, lower high, lower low. Then what did it do? It came to this area. I believe we took sales. I didn't take sales here. Yeah, we took sales for anticipation of this key move to the downside for the New York session. But what was wrong with that trade and why we ended up losing it is because that 4-hour candle had closed bullish. Right, we already have these signs of slow volume in terms of the structure. You can just see it just started to slow up, and then that candle closed bullish at our session time. We should have been looking for buys for a steeper move to the upside. We was looking for a continuation trade. The only thing, and had this candle closed bearish, it's likely that for the session we would have got this move to the downside that we were anticipating. But that was the key there. So knowing what we know as far as our current structure, let's dial it down to the smaller time frame and let's see if we can find a nice place of resistance that we can look for potential entry. I'm really not loving the price action on the chart today. In terms of our structure here, it's just kind of in this choppy structure. It is creating lower lows and lower highs, so you can see that price was pushing up, creating higher highs, higher lows. Boom, we got this nice impulsive move. You got to break through. Oh man, hold on, let me. And it's, you gotta bear with me here because the markets is choppy, but you gotta look. We gotta move to the downside, a move up that broke for that previous high. All right, so this becomes now our key low here. What happens? Price pushes down, breaks through this key low. Then what do we see happen? We get a change, or that's our change of character. Now the price could go to the downside, and what do we see happen from there? Well, price push through this. You got to look at this as one full structure. From here to here is the full move down that broke through this low. So what does that mean? It means that this is our key high, and we're on the 5-minute time frame, so volume is really slow in terms of this structure. It's just not looking too good. But what happened next? So price came back. This would be our key candle here. This big bear candle, which was the start of the move to break for this low for our change of character, is the entry location. So if we're talking about in terms of our strategy, this was out of our session time, but in terms of how we capitalize on structure, we would have wanted to look for our bearish, the first 1 minute candle, because we're on the 5-minute time frame. So the first 1 minute candle that taps into our key level of demand here is where you want to take your entry. So let's say the first one was this one, but why was this a weak candle? And why, I mean, don't get me wrong, I'm not saying that price couldn't flip off of this candle here, but why is this a weak candle? Is because it has no top wick. And when price has no top wick, it's likely that you go back up there to get that top wick. Similar to how we see this has no top wick here, along with this one. So these are areas these are early indications that price can make a potential bearish move. We started to get a good bearish move following some volume here. But essentially, where would my entry be? Even if we take it on that first candle, my stop loss still goes above this high up here. So we look at about a 7 pip stop loss, and then you want to target back down to the low here, which would be the target profit. So that wasn't in our session time. That was based off of the previous 4-hour candle. What do we see happening now? So our previous 4-hour candle did in fact close bearish. This current 4-hour candle is bullish, but you got to understand that price is at a resistance level here. So we always want to do our analysis based on top down. And if we're talking in terms of top down, price was in this bearish structure. So this is the wave that I want to focus on right now. Price is in this bearish structure, creating lower lows and lower highs. Then we get an impulsive move that creates a strong, sturdy push up that broke some key highs there. We broke some key highs. Now we're back at this low. We're back in this area. What did price do? It hasn't yet broken this low. So what does that leave for the markets? That it can reject off of this level. And how do we trade? We trade based off the previous 4 hours. So, but it's important to understand what the overall time frame structure is doing and where you're at in that larger time frame structure. If you take a look at the daily time frame, the previous daily just closed bearish below this level here. So what is likely is that we can see a potential steeper move to the downside, breaking this low here. And our next immediate resistance is right here at 1.10127 levels. So that's where we could anticipate price to go. For today, we would just be looking for a simple break of these lows based on the previous 4-hour structure, or based on what the previous 4-hour structure was showing us. Now, like I said, I'm not a big fan of the price action candle movement, but in terms of the structure, and we have a break of a new low, our key high becomes this level here. So that same candle, which was the same as the 5-minute candle, similar to the same as the 5-minute candle, you can see that there, is the entry where we would want to look for price, or not the entry, is the place where we would want to look for price to reject off of. Now, price can also reject where it's at currently, depending on how market structure is, or within here before making another push down, if that's what price wants to do, is go to the downside. So these are areas where price could reject. Where we're at currently, I don't really like where we're at currently. I'm not gonna lie to you. So I wouldn't be really looking. I'm not too pressed to take an entry from where we're at as of right now. I just don't like this structure. So let's take a look at what the DXY is doing, because the DXY, and we'll break down the trade from, actually let's break down the setup that I was looking for last night and why I ended up with $1,000 loss. So roughly, let's actually, sorry, you guys can see. I'm gonna pull it up for you guys. Position or the history. Is it gonna do it? Give me 1 second. If it's not gonna do it, then I'm not going. Oh, okay. Now I want to act like it's 1 second. Okay, cool. So you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700 when it was closed. Okay, that's only because I didn't personally. So you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700 when it was closed. But you can see if we go to, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700. But you can see if we go to, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700. But you can see, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700. But you can see, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700. But you can see, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. I was told it was at 700. But you can see, so you can see, yeah, we took the $1,000 loss, and I thought it was at 700. Until this shit was level. So you can see, yeah, they took the $1,000 loss, and I thought it was at 700. Until this shit was level. So you can see, yeah, they took the $1,000 loss, and I thought it was at 700. Until this shit was level. So you can see, yeah, they took the $1,000 loss, and I thought it was at 700. Until this shit was level. So you can see, yeah, they took the I don't know what that is, but another video playing in the background. Yeah, can you guys can hear me now? Can you hear me now? I seen that it says it looks like probably my stream was playing or something in the background, but let me know if you can hear me. Okay, cool. I just want to make sure. Okay, so yeah, so just like what I was talking to about bro the other day, is he was stuck at that break-even stage. We're not really at a break-even stage. You can see we got a 67% win rate, so we're positive because we have a higher win rate, and this strategy has a high percentage win rate. But in terms of holding to the full take profits, this is areas where we can improve. We talked about it last week. We had somewhere of a $15,000 to $16,000 potential if we execute to perfection. Yesterday's trade, if we execute to perfection of the system, we make about $10,000. And conservatively, let's say we don't take the scaling trade, we make $6,000. So we were up. Before the $1,000 L, we was up like $4,800. Now we're about $3,700 on the past 2 weeks. Still on this current week, you can see, I guess here. So still in this current week, we are in positive $1,700, $850 on the daily. We took 2 trades, average risk reward 1 to 5.6, but there's rooms for improvement. This is cool, but this isn't great. You know, this is cool, but this isn't great. So there's areas in which we can be better and do better. You know, that's the goal, is to try to come out here and get 1% better, both theoretically and literally. So the trade that we took last night, was let me see. I wanted to see, this was Monday. Yeah. So I wanted to see a continuation of this move to the downside. So price had been creating lower lows and lower highs. Previous 4-hour candle had closed bearish. So this 4-hour candle had closed bearish. This 4-hour candle didn't have a bottom wick. Well, I know it did have a bottom wick, but the DXY's 4-hour candle didn't have a top wick. And the DXY, just for reference, the DXY is like the inverse of EURUSD. So if the DXY is going up, EURUSD is going down, and vice versa. And their structure is very, very similar. If you put the two structures side by side and you invert one of them, either the DXY or the EURUSD. So let's say we inverted EURUSDs to USD EUR. It would look almost identical to this DXY structure. And that's why it's important to understand what the DXY is doing so that you can get an idea of how price can move. You can see that on the DXY, that 4-hour candle that I was looking for a flip for didn't have a top wick. And it didn't get the top wick within that candle, but it did flip after the candle closed and push back up above that high, which was, utterly the target that I was looking for. And what did we see happen for EURUSD in terms of the trade that I was looking for? So the previous 4-hour candle had closed as a bearish candle here. And you can see where if we dial down to a little bit smaller time frame, you can see where we're in this lower low and lower high structure. So at the time of looking for the entry, and I got a less than ideal entry on that trade too. So it was such low volume that we ended up getting a little bit of spreads, which made a difference, shall I say, on my actual trade entry. So instead of losing 1,000, I should have lost around 700. Technically, I was wanting to risk 1,000, but where I exited, or since I got slipped for my entry a little bit, it ended up being around like $1,300 that I was risking. And so that's why I was okay with closing early for the trade. But we're going to break it down. So price had slowly but surely got to, I want to say, man, I gotta go through and check because I don't quite remember exactly where I took my entry. I sent it to the chat though. Okay, on the 30-minute time frame. Okay, so price was going up to, let's go to right here. Okay. So a couple things that actually went wrong with this trade. For one, the first thing is that since price was creating high, okay, we had just got on, I think, the 1 hour, let's go to the 30-minute. So on the 30-minute, we just got a new low created. So price is creating lower lows and lower highs. What is this? Price came down, pushed down to this low, created a high. This is like a range bound, so I'm going to just say here. Then we got, I want to say it broke through this low, a correction, a continuation down. All right, so I'm looking for a continuation. Since this was the previous low that broke through there and price pushed up, broke through that low there, and there's a lot of red flags with this trade. I was looking for a flip off of our key zone here for price to continue and move to the downside in the direction of what the current trend was. And we have to go back some so that you can see. So what was the first thing that was wrong with this trade? For one, on the 1 minute time frame, price was creating lower lows and lower highs. I mentioned to the Telegram that I would prefer to have taken the buys on this move, even though the previous 4-hour candle closed bullish or bearish. I would have taken the buys to that retest zone, which would have been the more ideal trade. Why I didn't, and I'm sitting here having to wait for a long time within my session. The whole move was to the upside within that session. And that should have been the bias, because I would have been able to, take profits and then go to sleep on time. We got a victory and whatnot. But it was just, and this is around where I was looking for, let's see here. So price had pushed up, pushed down, pushed up, pushed down. Right here is where I was looking for my entry, right? But if you look at this and you set your stop below the key low, it was like 0.7. It was the one that I was looking at was like a 0.7 risk, stop loss, or not 0.7, but 0.7 lot size. I can't do nothing with that. I can't do nothing with that. And where my target would have been is right at this retest location. But since volume is so slow, I couldn't do this. And then you gotta, even right here is 2 pips of a stop loss, and granted, 2 pip stop loss isn't bad for a 1 to 2.75 risk to reward trade, but it was just so low in volume, dude. It was just almost not even worth it, to be honest with you. But looking back, a 2 pip stop loss would have probably been solid enough with this low and slow volume. So hindsight is 2020. So what did I do is I took my sell after this 5-minute candle closed bearish. Now we just talked about the weak candle. So there was a couple things that made this trade setup very, very not the most ideal. The first thing is that it went outside of the rules. So what was the rules? Let's go to the rules. All right. It broke rule number 2. Trade the Tokyo session from 9 p.m. to 10 p.m. Eastern Standard Time. When did I take this entry on this sell? 11:18, I think, p.m. is when I took this sell. Well outside of my trading time. Well outside of my trading time. That was the first thing that was wrong. All right, let's go back to it. Oh, wait. There we go. There we go. All right. So let's go back to it. That was the first thing. What was the second thing? This is a week candle here. And my entry was within here. So this is where I really wanted to get an entry. And it makes a difference when you get a less than ideal entry. It makes a difference because my entry was supposed to be here. 1 minute time frame off of this 1 minute candle, where I ended up actually getting in, or where they executed me at, way down here. So I wasn't too thrilled about that. You know what I'm saying? It changed my risk from being, because I was adjusting for a 3 pip stop loss. It ended up being like a 3.3, with that less than ideal entry. If I get in right here, or it was like 7.5 where price was actually at when I got in, it would have been better for me being able to manage risk on this trade. And what did I do wrong? Well, there's a couple of things. For one, after we got this, we never saw a change of character happen. And I just wanted to see a change of character. Price pushed down, pushed up, and this is just creating higher highs and higher lows. From this entry, pushed up, pushed down. I wanted to see this low get broken. It couldn't get broken. I'm like, okay. Then we just created a new high. Let's see if we can get this low get broken. It was like, okay. Price pushed up again. I'm like, all right, this is getting to be too. I'm just gonna get out. So this is where I ended up getting out at, and let's see where my exact position was. Positions. Nope. We need to go to my account order history, and I'll do this and share it with you guys. Okay, so my actual 395 fill price, I think that's where I got out at. Yeah, okay, position closed, fill price 395. So let me see here. So 395. So it executed my, oh man, and this is just due to spreads is why I got taken out up here. Because I don't even think price reached this level. It didn't. And so as soon, and I'm talking, I get out right within this candle here. It gave me the little bit of spread, is what it is, whatever. Price is so little volume. But if I just wait 3 minutes, we start to get that move to the downside, which then from there, I would have been able to just close my position with a small loss. That was that change of character I wanted to see. This is already well outside of my session time. Let's just close this and get out of here and call it a day. Go to sleep. Oh my goodness. There's no point in just sitting there doing that. And then Another thing of confirmation of why this was a weak trade is because our 5-minute time frame over here didn't have a top wick within here, and I want to say like the 15 didn't have the top wick, so that was the one, that was the key right there. This 15-minute candle, no top wick. What is price likely to do? To push up? And if you take a look at the 4-hour time frame, price is technically still bear. Let's go. No, that's not a good one. Yeah, no, technically it was, this should have been my key high. But nonetheless, there were some weak confirmations. The biggest one being that this was just outside of the session, and the move inside of the session was it was based on the 30-minute time frame. Should have been based on the 30-minute time frame. So you can see this is where 2100, this is where we get our candle close. This is where we wanted to scale in for that corrective structure move for price to just retest here. And let's go through it because this is all about learning. Where should our entry have been? I gotta mark that 30-minute low, or that 30-minute close. This is the 30-minute low, so our entry should have been inside of that 30-minute low. Let's go down to the 1-minute time frame because this is just choppy. Yeah. So after this grab here, wait. Is it close? Yeah, this is the start of the new 30-minute. So after this grab here, and realistically, even within this area, you could set a safe stop below the low of the previous candle here. When this candle closed bullish, you know, you got weak confirmation or weak market structure. But you can see that price had closed higher highs and higher lows. High, low, new higher high, came back down, retested all of this mess in the demand zone, and then continue pushing up. Why would I have gotten in there off of entry? Just because price started showing signs of resistance at this area, and it's already ugly market structure, so we're not expecting it to be super clean and crystal. Sometimes you got to get down and dirty with the ugly ones. But then just set a take profit back up here. So realistically, if we get in there with a, let's say 2 pip stop loss, because I wouldn't have did 1.8, a 2 pip stop loss, we make a 1 to 2.65. So instead of losing 1,000, we make, and I only risked 1,000, so a 0.5, and I generally take about a 1%. So I already knew, since it was low volume, that I didn't want to be in on a full percentage because it was sloppy. It was sloppy. We was out of session. There was a lot of things that just was like, you know, reduce risk on this trade. But yeah, so that's what we got. So what do we have today? What do we see going on now? We're getting that corrective structure. Excuse me. Let's move some of this stuff back up to that key zone we were talking about that we wanted to see. We got a shallow break here. So we're going to highlight that entry location. And again, this candle does not have a top wick. Weak confirmation. It's a weak confirmation. Price could, you know, take that out and reject off of an area more like this area here. But we just got to see how price and market structure is. Let's take a look at gold. We haven't, like, because there's nothing going on with EU right now. Gold looks much better in terms of market structure, at least just even based on this current, you know, well, the previous 4-hour closed extremely bullish for gold. So that's important to know. How did the previous 4-hour, this 4-hour candle hasn't closed. So the previous 4-hour candle closed immensely bullish, though in a corrective structure, you know. When price gets back up to this area, we really want to see how gold reacts at this area. Because if you take a look here on the 1-hour time frame, price was creating higher highs and higher lows. Then it came down, broke through these lows here, pushed up. This is not a full corrective structure, but this would be like an in-session trade that you would want to take in terms of the corrective structure on the smaller time frame. But it just was, I think this was NFP. So that's why we see it happen with this spike. Generally, in a normal market structure, you would see a full-on corrective structure. It wouldn't be a bottom wick. It would have been a corrective structure, just similar to how we seen on that smaller time frame. But it would have been slower. It would have been slower and more defined. But now we're reaching up to these levels here. So once price, and you know, we got an impulsive move because we got a strong move to the downside. So this is an impulsive change of character move. And now what we're seeing is what appears to be a corrective structure move in terms of how much volume we're seeing. You know, this is, let's see, roughly 42 candles. So 42, 3 days and 20 hours worth of candles. And this happened in a matter of, 4 hours, So in terms of volume, the move is to the downside. I do like it as a rejection, but price is currently in this higher high and higher low structure. And so if we're talking in terms of this higher high, higher low structure, let's say price was right here at the time that our session started. You get a corrective structure down and you look for buys to continue pushing up. Why? Because this is our correction model trade. And with our correction model trade, our take profit would have been right where we're at right now. And I can show you this based on the rules of our strategy, which was going to be up on the screen. Yeah, so this would have been a corrective trade, similar to the trade that we would have taken on EUR USD should have taken, shall I say, on EUR USD last night. And despite the volume, and being low and slow volume, a 2 pip stop loss is relatively safe. In terms of not just the structure, but just being able to protect yourself against spreads, against brokers, it's all right. In that current market structure, because in a normal market structure, let me see. I'm going to transition this over. So in a normal market structure, let's go back to EUR USD. It's on a 1 minute time frame. Where was it at? It was. Oh, okay. Yeah, this is where I wanted to see it flip off of. There, because price had created this low, new high, new lower low, retest that for continuation down. But in our session time, price was creating lower lows and lower highs. So for a regular market volume trade, we would have been in here, and you could just set your stops slightly below this level to our left hand side right there. Or, you could set your stops below this low there. I mean, this is where likely I would have set my stops. This is where I was trying to set my stops, and it was only a 0.7 lot size. I'm like, oh no, that ain't gonna work. That is not gonna work. But I didn't even think to just say, hey, you know what? Let's just do 2 pips. In terms of the structure, this is super safe. And then it'll give us enough room to accommodate for spreads, and we can still make a 2.75 risk to reward during our session time instead of agonizingly trying to wait for price to get it to this area where we already have a weak confirmation, both in the candle that flipped at the area where I took my entry and price not having a top wick on that 15-minute time frame up here. It's just weak confirmation. It's better to just take this trade, let it be the corrective structure trade, and then if you do get a solid move from there, that had just been a move that we couldn't get because I'm just not staying up. It's not worth it to sacrifice the sleep, the schedule. We're running on, 4 hours of sleep here. But there's things that must get done. So the day started, we just go to sleep a little earlier tonight. We'll stay up for the session. But after the session, I'm going to sleep. And I told you guys, I haven't gone live for the session, but I've sent the trades out, and I told you guys on stream that when I'm in that Asian session, I'm trying to get quick profits. I'm trying to get in and get out so that I can go to bed and we start the day up again, and we come back for this session the next day on the live. But in terms of sitting here and waiting outside of my session, it's not worth it. It is not worth it. I'm telling you, it's not worth it. So we just gotta wait. So what do we do while we wait? We can talk a little bit about the new content I have planned. I want to teach this in a way that's authentic to the trader journey. Really authentic to the trader journey. So if you guys haven't seen, I posted a new reel on Instagram, which is basically a reflection following last week. So how the system is going to work is for every live stream that we do, every New York session, just in general, because I'm gonna stream every New York session. So this is going to be the new norm. We meet at 9:00. We'll meet at 8:30 if we are like 8:15 if we have some high volume news that's coming out at 8:30, so that we can be on before the news. Similar to what we did for NFP last week, we was able to catch a good trade on NFP following the news, but we had to get on the session a little bit earlier, 30 minutes earlier. So. But what I'm going to do as far as the content is, every single post is going to be a trading entry, or not a trading entry, but like a diary entry or trading journal entry, whatever you want to call it. Essentially, it's just me reflecting on whatever the trade is and explaining whether it's good, bad, or ugly, because I can't make it up. And what I was struggling with as far as on the creative side of trading, because I can do the trading part, but on the creative side of trading, I was really struggling on, for one, consistently being able to produce some type of valuable content. And there's some things that people just aren't doing in this industry, which is just seriously documenting their journey. And I don't mean as in like, I tell you that you need to get my FX book and different apps that you can leave, or secrets to trading. No. It's not none of that. Literally, I took this trade. This is my entry. This was my exit. Explaining the trade. That's the content, and I wanted to do that because that is so much more valuable, because essentially it doesn't matter what you call it in terms. You could have called this a bear candle and this a bull candle. Now, against the common masses, you would be wrong. But once you just the charts are all about being able to identify areas. Once you can see the charts, it doesn't necessarily, like, you obviously want to have the right terms and you want to go about it the right way, but it doesn't matter what you call it or how it is, because the markets move how the markets move. So if you understand structure, that's good enough. You might not be able to definitively explain what it is that you're seeing, but your eyes get adjusted to seeing it, and you start to spot it. You're like, I think price is gonna flip here. Why is it gonna flip here? I don't know. I just got a feeling. And once you get to that portion of your trading journey, that's when you start to obviously the confidence builds, and then you want to build on, the education part of it. But essentially, there's nobody in this industry seriously just documenting their journey and reflecting on the different trades that they took. Because every trade I lie to you not, with this system, there is a right and a wrong trade. Yesterday, we was in the wrong direction, and it was outside of the system. The trade was outside of the system, meaning that it was outside of our session time, and it was also the smaller time frame in our session time was creating higher highs and higher lows. So it doesn't necessarily always have to be based off the 4-hour time frame, because we had seen that the previous 4-hour candle had closed as a bearish candle. But what do we know also happened with this move to the downside? Well, price had broke through a key low, which was a shallow break, but it did break through, and it was rejected off of a larger time frame demand zone. So we're getting this rejection. You gotta bear with me now. Bear with me. We're getting this rejection. Let's see if it was the 15-minute time frame. Might have been the 30. Yeah. The 15-minute time frame. So the 15-minute time frame, based on, and we're talking on a daily key level here. We're talking on a strong level. This level gets broken, price gets more volume to the downside, right? We're talking a strong level that we're getting that reaction off of, and then seeing how this setup right here, I'm going to show you the waves that you got to be on the lookout for. This right here, when you get a move down that breaks for a low and you get a candle that closes like this, especially if you get two, that third one, you better be looking for that continuation, because you're getting a correction. This is like the key setup, the key play design, I guess you could say, for a corrective structure. Essentially, this is a corrective structure dream. A beautiful corrective structure that we can capitalize off, and is a high value, high probability move. We see things like this happen a lot of times on the 4-hour time frame. With this right here, you can see price pushed up, it had that high volume. This candle closed bearish, this candle closed bearish, this candle closed bearish. I think we even might have sold Wednesday night. Oh no, Wednesday night I didn't take a trade. Now, don't get me wrong, the overall structure is bullish, but in terms of a corrective structure trade, you can start to see some of that movement to the downside that night. So you start to see a price pushes. Nope, this is during the day, Thursday. Man, I done lost the spot. Hold on. Where we at? Go back to the 4 hour. This is our 4 hour candle. Now this move, all of these, happened outside of our session. So during our session time, price had just closed as a bearish candle. The next candle immediately bought up off of that session. And how do I know that? Well, it does have a bottom wick. I take it back. Always zoom in and say if it has a bottom wick. It has a bottom wick. And then it just pushed up. And pushed up for there. So Wednesday night, it wasn't the best structure. That's why I didn't take no trades that night. Thursday, we missed our trade. Well, it's not that we missed it. Price didn't go to our exact entry location. Similar to the trade that we took yesterday. The trade that we took yesterday didn't go to our exact entry of demand where we was looking for it to go. Was it 6 o'clock? Oh, okay. This was our area. Okay. So we wanted to refine what we were looking at in here, right? So let's go refine it down. You see on the 15-minute time frame, we wanted to see price come back up to this level up here and then sell to the downside. What had happened is price closed as this rejection 15-minute candle, the same thing that we seen happen last Thursday. The same exact thing that we seen happen last Thursday, and yesterday we was able to spot it to get in for that continuation trade because price is creating lower lows and lower highs. We wanted to see that continuation to break the low. Where did we go wrong in yesterday's trade? Well, where I went wrong in yesterday's trade was not holding to the full take profit at the break of that low there. So you see, this was our and I don't remember exactly what my entry was, but conservatively, let's just say that this was my entry. I was in somewhere within this candle. It might have been even better than what I just put up on the screen, but let's just say conservatively. And let me see. I can actually look at it. Entry. 1.10497. So 497 was my entry. So I got it at 489, 497. Up here was my entry. So not holding for price to break through this low, which would have given us not a 1 to 5. Whoa. I'm pretty sure I had like at least a 4 pip stop loss. Okay, so it would have given us a 1 to 3 risk to reward, which was about that $6,000. And why should I have held? Because it was a continuation trade. If you take a look over here at the journal, you can see that is rule number 8. For the continuation trade, you set your take profit for a break of the low or the high. In this case, it was the low that I should have set my take profit. I gotta stop saying we like it's somebody else trading for me. That I should have set my step. That's where I should have taken my profit, shall I say. And so then in terms, we're talking long term here. We're not talking about today. We're not talking about yesterday. We're talking about long term. In long term growth of the account, this is important because if we execute perfectly in the past 2 weeks, we should be somewhere north of $23,000, and that's conservatively speaking. It should be somewhere closer to 25. And you see on the past 3 weeks, we're only up let's see, trading dashboard. In the past week, we're up, 1,700, but in the past 2 weeks, or since the beginning of the month, I guess we could say, we're only up 3,700. So this should not be 3,700. We should be somewhere closer to $20,000 if we execute to full potential. This is not bad, but there's so much room to grow. We're only rocking at where we're at currently, about let's say it was about conservatively $2,400. We're only rocking at a third. No, 2,400. How many times is 3? 4. Let's just say, let's round up. Let's just use whole numbers. 4 and 24. So we're only rocking with 1/6 of the profits of our full potential if we're, we capitalize at the full potential. And saying conservatively, let's just say 20. Even at 20, we're still only rocking at about, what is that, 20%? Yeah, that's 20%. So we're only rocking at about 20% of our total potential. And I want to tap into more of that 80-90%. That's where we're going to be. That's when we'll see that we're going to be great. If we can tap in, if and when, because we're going to do it. We just got to go day by day. And as we do this more and more, we'll increase. But we want to tap into that full potential. So it's not bad. We're still profitable. It's not like we're losing, you know what I mean? But there's just room for improvement. There's always room for improvement. Until we can put together and execute on perfect weeks, then there's always going to be, and there will always be room for improvement. But as we do more and more of these sessions, this win rate will go up. Our trades of our risk to reward will be increased. So this should be somewhere closer to about a 1 to 4 risk to reward. A 1 to 3.5 should be about our average, actually. And then, the win rate, we wouldn't have lost. We would have 0 losses in the past 2 weeks if we execute right. Because we only lost 2 trades. So the trades that we took, we only lost 2. Yeah, so these were the 2, 627, 700 on Wednesday. That ain't right. That ain't right. I don't know nothing about this. This is off. Because there was only one trade and it was for like $700. But anyways, that's not the point. But we could be executing at a higher potential, and that's what I want to get for the Culture FX to is create individuals that are executing at their highest potential, and then from there just watch how things change. Watch how it changes. It's gonna be amazing. So I'm excited for this experience. I'm excited to continue to grow with you guys. I think that what we're trying to do here and what we're trying to accomplish here is something that is far and few in between. That's for sure. So what did we get? We got a shallow correction. And remember I told you guys that price could flip from where we at. Even though I didn't necessarily like it. But I said that we could flip from where we're at, or price could flip from, and this can go. I don't want to take that trade. I don't like necessarily how price, and why could, let me go back because I keep getting ahead of myself. Why could price flip from this area, you ask? Well, if you dial down to the smaller time frame, price is creating lower lows and lower highs. We know that price broke through this low, came back up. It's very, very shallow and you got to zoom into it, but it broke through this low here. So this technically becomes your now key high, and then you can see that continue move to the downside, which is why I said that we could see some resistance off of this area, but truthfully, I didn't like a retest of this area. I would much rather have preferred that full-on corrective structure. And you can see that this current candle came in with an immense amount of volume simply because it didn't have a top wick. So in terms of being able to actually take the entry, I mean, this kind of trash. You can say you want to get in right here, which is our actual key candle on the 1 minute time frame, and let's say we get in on the first candle that closes there. This would be the trade here, and just looking for a continuation play to target the low. It's a 1 to 1.74 risk to reward, but it's very, very sloppy. We're in sloppy markets, where this is not anything crazy to trade and to write home about. So it's not necessarily all too much worth it. But what are we seeing happening now? So now we're getting an update on this structure. That 4-hour candle is starting to show that, and we ended up getting that break over the low that we were anticipating for the session. So that's what we wanted to see. Unfortunately, we didn't take the entry or we didn't get the entry that we wanted for for this to move to the downside, it just didn't happen in the most beautiful way. Truthfully, it was very, very low, but there was an entry. There was an entry, and we knew that price could flip from this area. Though it wasn't the ideal scenario in terms of wanting to take this trade, that looks like that's what the trade should have been for today. And there's always a trade. That's how I feel about this. There's always, every time we come to the markets, there's going to be a trade. It's being able to identify when and where to take that trade, and weighing the odds. So I'm not going to fault today. I'm not going to say that we could have, in terms of, potential. Now we're talking full potential though. If we're talking statistically full potential, this is the entry. This is the entry. Even if you got in on the 5-minute time frame after there, I would have preferred the 1-minute time frame. Once you get this rejection candle, this would have been the ideal candle there for the move that would have only given us like a 1 to 1.7 risk to reward. So in terms of structure is sloppy. So we got a couple things that deterred me from this trade. Structure is sloppy. Volume is low. Tomorrow we have CPI. So we got a good move that we could get tomorrow for CPI that will. Oh, and speaking of which, we'll be earlier on the session tomorrow because of that CPI news. We'll hop on the session a little bit earlier. But you can see that volume is coming in now. And what time is it? 9:52. I'm telling you, once you get around that 10 o'clock candle, and we talked about this yesterday too, you get around that 10 o'clock candle, the volume starts coming into the markets. And it might be even to the point to where once we start getting close to a key level at 10 o'clock, I'm going to be looking for a potential entry, because that's when that volume, I don't know why EU does it, but that's when the volume comes in. That's when you start to see moves happen. That's when things start to shake. You know what I'm saying? Like, we started to see our entry came before 10 o'clock yesterday. So 9:30, our entry was when our entry came, right? But we start to see the volume. If you take a look here, this was that 10 o'clock candle. This 10 o'clock candle had more volume in it than the entire session. Than we seen within the entire session. It had roughly, I don't know how many pips it is. Pips is relative to whatever the structure is. So I don't get too caught up on it. It's only 12 pips, but you know what I'm saying? That's where you start to see that volume. I'm telling you, that 10 o'clock candle is dangerous. And we'll put together a system to where we're better able and better equipped to capitalize on it so we can get volume like this. And so if we're in that trade today, what did I tell you guys about, or I don't mean to sound like a dad or nothing like that, but what I mentioned last week on stream is when we have volume that comes into the market. So when price reaches our area, if there is still so much volume on the 1 minute time frame, we're not closing the trade just at this entry. We're going to let this volume give everything we want. The first bullish candle, we take our exit. Now we exit now. Right now, we get our exit. And why do I do this? Is because we want to let the volume play out. If price is saying, hey, look, we got a lot of volume, we're not stopping at your area, we're blowing past it. Okay, blow past it as far as you want to go. Go as far as you want to go. I'm going to hold you until that first candle closes bullish, because I already am getting a bonus, right? This is all I wanted. But price pushed through this area and it just kept pushing down. All right. When is that first bearish candle forming? Boom. As soon as that first bearish candle form, I get out. Or bullish, excuse me, in this example. That's when I get out. So this is just dropping. What did we have news today? I don't think we had any news events. Let me make sure that I didn't miss nothing. Cause boy, the volume we getting from this 10 o'clock candle is looking like, no, we didn't have no news. So, okay, let's talk about it. Why did we get so much volume? We had no news, right? What did we say? And I said it earlier in the stream. You're going to have to go back and watch it. Go back and watch it. We're at this larger time frame area. And it was likely that if price broke through this area, you're going to get some volume. Where do we say that price could go to? Right here. This is where our next immediate resistance was at. That's what we talked about. And that's why we started to see the gap and the change in so much volume at this time, you know. And there's a reason for everything that happens in the markets. A lot of people say the markets are just sometimes. No, I truly believe that there's a reason for everything in the markets. We didn't just get the markets are like a puzzle. You need to understand all the different moving pieces, and it's more like a machine because there's a whole bunch of different moving pieces. But if you understand each moving part, and you know, like we anticipate that volume will be there. If I anticipate that, you know, this current 10 o'clock candle is going to give us that move to the downside, then being more inclined, that I would have been more inclined at that point to take a position there. And then remembering that if we break through this low, that'll break through this low over here, which was our target. We could get some volume just based on where we're at on the larger time frame structure. And so couple of things, man. I love doing this, man. I love doing this. This is because this is fun for me. I enjoy these streams. I enjoy sitting here chopping it up about the markets. I enjoy being able to trade, man. Skill is a blessing. It's truly a blessing. And that's why I'm here trying to, you know, scream to the roof to everybody about trading. Learn this skill. Master this craft. If you master this craft, oh my goodness, we're only at 20% of our and just to put this into perspective, right? 20% is not 20. We're working at 20% of our potential, right? Because we've seen based on the profits in the past 2 weeks, we've only executed at about a 20% of our full potential profit, right? If we're up around to our 80, 90, now we're talking about 18, 20, 21, $22,000. That's at 80, 90. You know what I mean? And this is on one 200K account, one singular 200K account. I have two 200K accounts, and I haven't been trading the other one because I don't like trading them at the same time. Or loading up, only because of the fact that I only have the two. I have those two 400 or two individual 200K fundeds, and then I got a 50K funding challenge with Funding Peaks, which I can't even trade because the website is not working, and they won't. Yeah. Speaking of which, I gotta message them about this, because the website to be able to trade for DX Trade is not working. If it pops up as like error, some error message. And that just won't do. That just will not do. And then a lot of you, or maybe not a lot of you, but some of you may know, I was working with the Forex Funder, which they ended up rug pulling everybody. I had even personal people within my group, close friends who wasn't able to get thousands of dollars in payouts because they weren't paying people out. And then I had 1.2 million in funding with them. 1.2 million. And I still have, you know, a 200K and 100K that's left with them, but it's like it's no purpose in trading it. It's no purpose. 3 of my accounts got breached because they didn't execute my stop loss. And to be a funded trader with TFF, you have to have a stop loss on every trade. So the stop loss was, and I have the screen recordings, I have all the proofs of everything. And this is not to bash TFF, but this is just to kind of explain my own personal experience of what's been going on in terms of why I only got 400K in funding, coming off of, you know, 700K last year. I ended the year off in funding and then reached up to that 1.2, and then, you know, or a little over 1.2. I think I was going to be around 1.6, 1.7 with a 2 mil goal on the year. So for this year. But then we had that migration that happened, and when migration happened, TFF didn't have enough funds to pay out all the other people. So I have just in 2 people I know alone, $20,000 of payouts that weren't getting paid out. And so it was just rough. And so they breached my account three of my accounts, a 200K, my 200K funded, 400K, and I think it was another 200K. So you're talking 800K in capital breach because they didn't execute my stop loss. And I go to the trade and I'm looking at the trade. My stop loss is still set and everything. And the trade is just running, floating, like deep in drawdown. And I'm like, well, how the heck is the trade still going if I have to take a trade? I have to enter a stop loss in order for, because if you don't have a stop loss with TFF or when you trade with TFF, they would breach your account. And so the stop loss is set. I have the screen recording, and then I went to the support and asked them for help, and they were just not helpful at all. They basically said, you know what, it's tough luck, tough luck. There's nothing we can do about that. And I'm like, and they tried to tell me, they said, you must have been trading in no spread hours. No spread hours? What does that have to do with my stop loss getting executed when price reaches that position? If anything, no spread hours is better for the trader because you have no spreads. That means where I get in at is where I actually get in at. So where I get out at is actually where I should get out at. There's no reason why the trade should have been running in so much drawdown, because the fact that, it should have just been closed. And so I got 3 breaches that day for an equity breach in the daily. I think it was a daily drawdown breach. Breached 3 of my accounts, and I know the CEO of of the Forex Funder personally. I went to London and met the gang, and hung out with them and did all of that, and it was a great experience. But don't get me wrong, I didn't know how, and I seen signs then. Like TJ, he had terrible spending habits, like terrible spending habits. It was bad. Either there was only 2 things that I could see. Either they were making so much money that he was able to just spend it like it was nothing, or they were, you feel me, running through all of their money essentially, and he just living the life. Don't get me wrong, I do think that is things that you want to do, but you don't want to, like, it was paycheck to paycheck with the business. You know what I'm saying? Like, it's making sure that we have enough funds in our accounts to cover this. Now they're bringing in, $25,000 to $100,000 not a day. I think it was like 25. It was like over $100,000, over a couple $100,000 in a month. And so you're going through all of that money, and a part of it was the lifestyle and things of that nature. So and I say all of this to say that when the migration started and MetaTrader was saying, no, you can't trade on our platform anywhere, MetaQuotes took their licensing from everybody, not just TFF. So many different firms went under because of this. And this is the second firm that I've lost an account to. I had an account funded with my Forex funds when my Forex funds went down too. And mind you, these are people that I felt that I could trust. So essentially, with the migration, they didn't have the funds to pay out the people that they had owed, and they couldn't sell more challenges because the migration was happening. People weren't getting accounts, so they were still posting and promoting challenges. Hey, this discount, this discount, this discount. But when people bought their accounts, they weren't getting their account information, their account credentials, because TFF has to do a money grab to be able to bring and continue to have customers, to be able to pay out individuals that they owe. And what they did with their payouts was they were very specific who they paid out. So they paid out traders, who have a following, traders who are in this industry and so that they can go and post, hey, TFF did this for me. And it's so crazy how sick this system or this industry can be. And that's why it was just, for me, I just went dark for a little while. I'm not gonna lie to you. I just went dark for a little while, stopped posting as much, stopped being as active in the community. And it was just really just trying to figure out what I want to do and how to go forward. And I'm not gonna lie to you guys, in the future going forward, it's probably likely that we're just gonna have to trade futures. This same system works. I haven't spent much time with futures, but I know you can trade gold on the futures side of things. So that's good. And then NAS 100. Oh my goodness. Wait till we start trading NAS 100 and US 30. We start trading Nas 100 and US 30. I promise you, we are going to eat. I just got to figure out the time. There's a time, just like with each, you kind of, it's like a relationship. You got to start to build the trust. You got to start to watch for the certain moves and things of that nature. But let's just take a look at Nas 100 right now. Because boy, does this structure move, and it moves beautifully. It moves beautifully. Look at it. Okay, no, that's the wrong one. Hold on. Nas 100. But why would we move to the futures firms? Because they're regulated brokers. So you don't have to worry about not getting paid out. You don't have to worry that, your firm is going to scam you and whatnot. Look at this move to the downside. Like, this whole week has been buys. But look at this move to the downside. You get yourself a high volume move on Tuesday of last week. Markets was relatively slow throughout the rest of the week following that. And then Friday, you get NFP, high volume moves to the downside. And then you see that corrective structure begin to form. Similar to the structure that I was telling you. This is where, remember, we talked about this structure on EURUSD based on the 5-minute time frame last night. Or during our session, but what happened last night, this is your dime piece corrective structure trade. So if this is happening in our session, we want to go ahead and capitalize on this move up. And I told you guys that it's more commonly seen on the 4-hour time frame. That correction, and this is where I get a lot of my correction trade entries. That's the motto there. So, in terms of volume though, this thing gets volume. It gets down for sure. So, and there's a certain time in which it does get down though. So let's take a look here on the 4-hour time frame. Let's go back to the daily. Oh no, the daily not gonna help us with nothing. We need to go to the 1 hour. So what I do and what I would do from here is just to look at the times where you have the most volume. Like this candle here. What time was that? 1400. That's 2 p.m. Eastern Standard Time for me. All right, not really looking for that. Where did this happen? 9 o'clock. All right, following that, you get that 10 o'clock candle. That's good. You got to change your character here. Boop, boop. Price pushes through these lows. Forms a change of character. 9 o'clock. Boom. You get your entry for that continued move to the downside for a continuation trade. Why would it be a continuation trade? Because price is in a bearish structure. It would have been a bullish trade had price not respected off of these levels right here. Right here, respected off it, couldn't break it. Price then began to push down. Every time you tap into it, we're going to push down. So, we'll be trading futures in the future. That's funny. But we will be trading futures. I got to understand contracts. I'm not too well versed on it at the moment, but I will, and it's just more regulated so that we can have a secure place to put our money and to grow with these prop firms. Prop firms are a great way to grow money, your account from a little investment, shall I say, to that can bring big rewards. With Nova funding, I've reached over around 20k in payouts from these 2 accounts that I have. I've gotten payouts from other accounts. I gotten some payouts from TFF too, when they were paying out, you feel me? Before everything went to trash. My Forex funds payouts as well. Was just about to become a VIP member for my Forex funds. So with my Forex funds, it has to be 3 months that you're funded, and you have to have 5 payouts. After you get 3 months and 5 payouts, and I was on my last payout, and I had the payout coming up, right? They just, rug pulled me. But they, once you become a VIP member, you would get a 90-10 profit split, and you would get same day withdrawals. Like, you could withdraw every single day. Oh my goodness. Oh my goodness. You're talking about being able to withdraw your profit. Now we're talking about almost as close as you can get to trading your own personal capital now, because I can withdraw anytime I want to. There's some other prop firms in the Forex industry, in the Forex space, that do this as well. There was like Funder Pro is some red funding program, but they did they rebrand or something now using TradeLocker? Are you referring to TFF? Let me know if you're referring to TFF, and then I'll answer that, because TFF, they tried out a couple of different platforms. TradeLocker is by far the worst platform for me. It has so many freezes. Yeah. So for TFF, they did a couple things. They did C Trader, they did DX Trade, and it was, I think, MetaTrader 5. If you were outside of the US, you could use MetaTrader 5. I don't know if that still stands, but that was essentially the case. And so what happened with that migration is this didn't just hurt funding firms. We're talking brokerages and things of that nature. Everybody had to make a shift to new platforms. MetaQuote said we're revoking everybody's license. Well, not everybody's license, but they started revoking. So it was like any of the brokers that I was using, you could no longer use MetaTrader. And so everybody was trying to find a new system, and that's when all of these others started to really emerge. C-Trader, DX Trade, Trade Locker. And Trade Locker just has freezes. During the New York session specifically, it'll freeze. And I'm talking, you can't modify your position. I made a video when I passed my, let me see if I can pull it up. When I passed my 200K funding account, or one of my 200K funding accounts, shall I say. And it was, oh man, it was rough. It was just completely frozen. You couldn't even see nothing on the screen. And I was told on the video, and it didn't happen to me then, right? Because I already had, for that trade, that particular trade, I already had my stops moved to break even. And we were at a, reduced risk on the trade. So I was okay with it being frozen because I was going to just either be break even or take profit anyway, right? But they essentially, they messed me up bad. Let me see. It happened like a week or two later again, and then I actually lost on the trade that I was trying to modify to break even, and it would have been a risk-free trade and end up losing. I messaged them, and I still have my Trade Locker account. I don't trade with Trade Locker though. With top tier funding, I still have that account. I haven't traded it. I hadn't been really all into it. That's just what it was. So let me see. This was the video here. Let me pull it up so you guys can see it. So this was the video. I don't know if you guys will be able to hear it. Let me see if I can.
Breaking this high here, we got a corrective structure. After the corrective structure, we went ahead and took our bullish entry, and now we are in on this trade. Now, what I'm looking for
is there any way else? Oh! I can do it like this.
You can see we have this huge gap that
video,
price can fill to this level up here. That's what I'll be looking for. It'll give us a 1 to 10. I'll obviously be closing this well before that huge gap. All that price can trade to this level here. It'll give us a 1 to 10. I'll obviously closing this well before actually huge gap. A 1 to 4 price can trade to this level here. It'll give us a 1 to 10. I'll obviously closing this well before actually huge gap. A 1 to 4 price can trade to this level here. It'll give us a 1 to 10. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust. This is the move. So 1 to 4 is to reward to give us trust.
Later off stream, because it is something that is playing in the background. I just can't quite see what it is. Maybe it was my stream. Let me see. Because I got 2 streams up. My boy Vic, that is my brother, man. And this is that's who I was talking about. Vic, who didn't get his payout from TFF. They completely did my boy slime. And to this day is TFFK. But essentially, let me see. And that's also the person that I was mentioning about on the team, that we had that team meeting that weekend, and then we both ended up passing counts though for TFF. That very next Monday, we talked about the GJ trade. We broke it down. We was like, this is what we're looking for, and we ended up getting that move. So I want to see if I'm just trying to find the trade where I was trading on Trade Locker and they froze my account. I gotta create way more content. This is not nearly enough. But slowly but surely, day by day, figuring out the system. It comes down to this is a good video too to watch if you haven't. This is a video about TFF and what happened with them. I think it was in this video though that I was trading with Trade Locker. Let me see if it was in this one. It's in one of these videos. It doesn't look like it's in there either. So I don't know what video it is, but one of these videos, essentially Trade Locker was just frozen. It absolutely frozen. And there was nothing I could do about it. So it just was what it was. And that was, like I said, it was what it was. So I haven't traded with them since. And I haven't traded with them since because their support team was just so unhelpful about the situation that it was like, I don't want to keep having to go through this over and over again. And really why I haven't continued to scale prop firms and, in this industry is because I just don't know who to trust. At the end of the day, I just want to be able to have clear and concise rules, understand that we can get guaranteed payout. So I want to make, the most important thing is that they pay out. Like, that is the most important thing. I don't really care about, I can work my way around whatever rules you got. Some rules are less ideal than others. You got consistency rules. You can't make more than 40% or of your withdrawal on a single trade or a single day. These are some of the rules that are kind of tedious to work around, but they're small. But the big thing is, are the firms going to pay out? And for me, it's not worth going through the effort of passing accounts and, trading and documenting it, especially if it gives a sort of free publicity in a sort of way. So for a while, I didn't want to tell anybody who I was trading with because, there's no telling when this could get a rug pulled for me. Because even with Nova funding, I'm funded $400K, but they had migration for a 2-3 month period. And then after that 2-3 month period, they gave us our accounts back for like a month and a half. I didn't trade within that month and a half on those accounts because I was focusing on, other accounts. They did another migration. So why we only have 2 weeks of data is because I just got my account back 2 weeks ago on a completely fresh platform. So like, that's the only reason why I'm just now, able to trade, and that's why we only have 2 weeks of data that I can show you, because all of it is gone. So it kind of messes with the history, because I had payout proof and you can see the consistency of growth on my account and things of that nature, but it is what it is. At the end of the day, I'm going to continue to trade, and it's really a small thing in the grand scheme of things. So a hard reset. Oh, another thing that sucks about this is that, man, another thing that sucks about this, and we're getting kind of late in the session here, so I'm going to wrap up soon. But another thing that sucks about it is they reset our payout schedule. So you have to, normally when you first get a funded account, generally the firm you got to wait 30 days. That used to be the standard, at least. You had to wait 30 days to get your first payout. That's what it was for Nova. Since they just did this remigration and this revamped the accounts, they now have it to where you have to wait 30 days for your first payout again to go back down into the 2 weeks payout, which is where I was at. I was at the 2 week payout with a max profit split, whatever the max profit split was. I think it's like 85%. So you get 85% of the profits. So I was at the max, and now I got to wait an additional 30 days to withdraw off of all the waiting I had already been doing for the accounts. The prop firm industry has just been, oh my goodness. And so I haven't bought any more prop firm accounts, and I probably won't until I want to first make sure that Nova is continuing to pay people out. Funded Peaks is going to get their website right so I can continue trading my Funded Peaks account and then grow, the personal account. And that'll be the focus for now. And then as I continue to grow and expand, I'll look for more and different prop firms so that I can diversify the risk. But realistically, in the Forex industry, it's like any day this could all get swept from under us. And I don't want to be in a position to where I have all of my eggs in one basket. So that's why we're going to switch to futures, because there's no rug pull coming with futures. Futures is regulated. So, you don't have to worry about not getting paid out. Is the firm going to pay me? You can just focus on trading and just doing the And so, that's going forward. That's the future. What did we see happen for today? A beautiful trade setup that we could have executed on. We got the volume that we would have needed. A no trade day. Typically, it is what it is. There was an entry. We didn't get the entry. We're talking about in terms of full potential. We're only rocking at about 20%. We're only rocking about 20% of our potential. And it's exciting. Don't get me wrong. It's not a bad thing to be at this 20% or 20% potential, right? We want to tap into more 80-90. We want to be elite in this industry. We want to be the best of the best, the top tier. And we're only competing with ourselves, of course, in this industry. But we want to be known as the elites in this industry. And to be an elite, we want to get to that 80, 90 up would be beautiful, but we're humans. You know what I'm saying? But if you can consistently shoot around 70, 80, 90% of the potential, that does wonders, And so being at 20% of the potential, you look at a chart like this and you say, you know what? At 20% potential, $3,000, $3,700 profit on the previous 2 weeks, it's not bad. We have room for improvement, and thinking about how much room we have for improvement gets me excited, because if we were just at our already 80, 90, don't get me wrong, that's where we want to be. But then, very few, now we're talking marginal errors, certain things that can happen that may or may not be in our control. We got to leave it up to the market. Sometimes things just happen. But in terms of the trades that we take and should take based on our system, we haven't executed to perfection. And if we execute that to perfection, this changes drastically. This is not bad, but it ain't great, And at For the Culture FX, we don't even want to be great. We want to be legendary. We want to be the best to do this, And with this system, it can work. It works, The system works. We come on here every day, we break it down, and we see and we learn from the human errors. Like yesterday's trade shouldn't have been down $1,000, shouldn't be even down, shouldn't have lost any trades in the past 2 weeks. You see, we're at 67. We lost 2 trades. 2 trades we lost out of however many trades that we took. There was a trade that I closed at break even. That was a slight drawdown, so that accounts for why our win rate is a little bit lower. There was like 2 trades that we had break even trades. One of them was actually positive, one of them was negative. So that equates to that win rate right there. It doesn't account for that, but we know that we are shooting in terms of strategy success. Every trade that we would and should have taken would hit take profit. Every single trade, not one of them didn't execute right. For every trade that we took, there was something that, I'm not going to say every trade, because there's one trade that we took in the past 2 weeks that was executed to perfection. And that's the first trade that we took on Monday of last week. If you didn't see that trade, the session is there. I also posted the daily recap of that on Instagram. So that you can see it's day 1. It's Trading Journal day 1. It's called Trade the Plan. That's what that episode is called, or entry, whatever you want to call it. That's what that's called. Oh, you guys can't even see this. I'm just sitting here talking with this up. So this is good. It's not great. We should see this win rate be higher, because we're shooting at if we execute on our full potential, this would be 100. No trade. We wouldn't have lost a single trade. I promise you, we wouldn't have lost a single trade. And it's recorded in those trading diary journal entries that I'm posting on Instagram. You'll see the review of the Monday trade, which was the only trade out of all the trades that we took and executed to perfection. The Tuesday after that, we had a break-even trade, but it would have been a 1 to 3 risk to reward trade with a dub if we would have waited for the news that was coming out at 9:45 and to get in on that 10 o'clock candle. Ended up with a break-even trade. It is what it is. Wednesday, completely on the wrong direction. The previous 4-hour candle had closed bullish, even though the smaller time frame was, or even though the 4-hour time frame was creating lower lows and lower highs. For that session, the previous 4-hour candle had closed bullish. So we ended up, but I ended up still taking a sell after the key zone, which would have been our key zone had price closed bearish. So human error. We should have been looking for buys. If we're in the buy moves, we get a 1 to 4 risk to reward on that Wednesday trade that we took a loss in, right? Thursday, what happened Thursday? Well, Thursday we come to this session. We mark out our key zone. Price had too much volume following the news that we had for Thursday that it couldn't push all the way to our key zone. And now this is where, if we're talking about improvement statement, we improved on this because yesterday we did the same. Price did the same exact thing and we were able to execute at the area. But if we were able to execute at the area on that last Wednesday, we don't miss that trade, which ended up running for about a 1 to 2.5 risk to reward. That we ended up with a no trade day, similar to what we've seen happen today. So this is, we're talking about full potential, right? Then on Friday, we get a dime NFP trade 1-to-1. That trade was executed to full potential too. We got the full potential. So we got 2 trades that we executed on full potential so far, in the past 2 weeks. And then there were 4 missed trades last week. Right now we're working at 1. We got 1 missed trade for this week. So we had 4 missed trades last week that would have all ran to take profit. And what else happened? Yesterday we learned from that what was it, Thursday trade, so to not miss the entry and to get in when price shows us that flip. We learned from that from last Wednesday. Yesterday we got in a trade, but what did we do yesterday? Yesterday we closed too early. Rule number 8 of the For the Culture FX strategy continuation trade says set your take profit for a break of the low. That's where our take profit was set. Where did I take my profit? At the supply and demand zone, as if it were a corrective structure trade. So that changes a trade from being a $2,400 trade to being $6,000. So we're talking in terms of potential. I'm not trying to glamour this up. I'm not trying to make it seem like I'm the best trader here. No, there's areas in this that I need to improve. And once we do improve in these areas and through these sessions and creating these videos, I'm learning. You seen yesterday, we learned from what happened the week before. So we're getting a little bit better every single day. You're starting to understand the markets a little bit more every single day. What was the entry I should have taken? What is the entry I took? How will we go forward? Going forward, last night we took a L on a trade that was outside of our session time. Rule number 2, right there. Rule number 2. So these are things that can be avoided. And don't get me wrong, $3,700 in the past 2 weeks is not bad. It's not bad. It's just not great. The number doesn't matter to me. How much we make really does not matter to me. What matters to me is executing at that 80 and 90 percentile area. We're only working with 20%. I want to get to 80 and 90, and this will take care of itself. This will take care of itself. So we're just going to strive to get towards that 80-90. This week, what are we talking about in terms of the trades that we took? We're looking at last night. We should have been taking a buy, but that was because, that realistically, last night should have either been a no trade day or we just take that buy within the session. With the 2 pip stop loss, even though it was so low volume, it would have ran to take profit, and that was the entry. Price was creating the higher highs and higher lows on a smaller time frame. We got no volume. We don't have any news, so there's nothing that's gonna flip us with a ton of volume. So price is just trickling up. You know what I mean? Trickling up until some volume comes into the markets. We took a $1,000 L. All right, boom, whatever. So yesterday, instead of losing, we could have actually either been break even, or if I go with my first mind, because I was looking at the corrector structure like, man, I gotta buy this, and then I put my stop loss. I'm like, oh, 0.07. Ah, man, a 0.7. I can't get down with a stop loss like that. But I could have just said, you know what? I don't need the 1 to 6 risk to reward trade with the 0.7 stop loss. Let's get the 1 to 2.5 risk to reward trade with a 2 pip stop loss, and that would be okay. You know, that would be okay. And so today, missed the trade. So we're talking three potential trades this week. We executed one, but we didn't execute it to perfection, and we missed the other one today. So, like I said, and we lost one, so we're sitting at about 20 percentile, you know. Didn't execute yesterday to full potential. If we would have executed yesterday to full potential, that puts us at a 33.3 percentile of our positive execution, right? Or it would have put us 100% at the time. The loss would have drew us down to 50%. Today's missed trade draws us down to 33%. That's if we would have executed to perfection on the trade yesterday and closed at our take profit zone. So we're actually less than that 33.3% of purely bona fide, blessed up execution on the week. We're more sitting around, you know, that 20, 25 area. You know, and we want to be on that 80, 90 percentile. So that's the goal. That's what we're looking to do. That's what we're looking to get to. And that's where For the Culture FX is headed. We're headed to 80 and 90 percenters, you know. And you got to go day by day. This is not going to happen overnight. We're not going to just jump from 20 percentile execution to 100 or percentile or 90, 80, 90. You can't, I mean, you want to be in that 90. You're talking you're in an elite group if you can execute this system at about 80 to 90%. You know, you're in an elite group if you can execute to 90%. The type of rewards and the type of the amount of money we can make based on how much in terms of risk to reward that we are risking is going to be crazy. You know, it's going to be crazy. And so I'm excited for it. I hope you guys are excited for it as well. The stream is wrapped up. So we're going to go ahead and I'm going to move this here so you guys can see me. I appreciate each and every one of you who tapped into this session, and I hope you got some type of value from it. There was a lot to be learned in today's session. We had one missed trade. We're executing at about 25 percentile. We need to be above 50% by the end of the week. I want to be above 50 percentile in pure execution. And we're talking about in terms of trades. Not missing trades, the things that were keys. Not missing trades, getting in on the right direction, and waiting for our take profits to be hit. You know, whatever that may be, depending on if it's a continuation or a corrective structure trade. 3 things to improve on. Don't miss. And how we don't miss is understanding where price can flip off of. We knew where price could flip off of. What was the missing piece? The volume from the 10 o'clock candle. If I would have put that together, we take that short position and we make a 1 to 2.5, 2.7 risk to reward today, you know, instead of having a no trade day. That's on me, you know, because I'm not executing to where full potential. But I'm getting better. Every day, every week that we do this, we're getting a little bit better. And that's all that matters. I'm telling you, that's all that matters. Because growth is exponential. It is exponential, baby. You get 1% better today, 1% better the next day, 1% better the next day. And in 2 years, you'd be almost 200-300 times better, because that 1% that you got the day before is going to equate to so much more over a long period of time. So today we're executing at 20%. So by the end of this week, we want to get up to 50%. I need a big leap, you know, a big leap. That means we're going to execute the rest of this week to perfection. To perfection. And that's what we're striving for here, man. That we're striving for that perfection in terms of how we execute. I'm not saying perfection in, you know, we just don't ever lose a trade, because losses do happen, but they happen very, very, very rarely if you abide by the system. I'm telling you, the losses we wouldn't have lost in the past 2 weeks. We only got 2 losses though. In the past 2 weeks, we do only have 2 losses out of like 9 trades. You feel me? But we wouldn't have those 2 losses. And all the other trades that we took of those 9, we didn't execute to full potential. Of the 9 trades that we took, only 2 of them were executed to full potential. So we're talking on average. Did some balloons just pop up? What is that? If you put a peace sign up, the balloons come up. Oh, would you look at that? Next time we get a trade, we putting the peace up. And we're just going to drop the balloon. Can it do something different? I'm sorry. I know this is like not important, but I'm like, where did these balloons just come from just now? That just threw me for a second. Let's throw it one more time. One more time for the balloons. Come on, let me see. Yep, you throw up a peace sign, the balloons come up. That's smooth. That's smooth. I like that. When we get our next winning trade, we're gonna throw up the peace sign so that we get the balloons. I wonder if we could change that to like fireworks or something. I don't even know how that happens. That must be something that's programmed into the system. But anyways, we're striving to get to more that 80-90 percentile. You can see that what's going on in the markets. We missed the trade today, but 80-90 percentile, we will be all right. You know, we're rocking at 20%, but 20% is a great place to be. Why is 20% a great place to be? 20% is a great place to be because that means we have so much room to continue to grow, which makes me excited because $3,700 is not bad. 2 years ago, it used to take me, 2 weeks of hard slaving just to make $1,600. I'm talking 40-hour weeks, 45-hour weeks, 2 to 9 p.m. every day. You feel me? Well, Monday through Friday, for real. But essentially, you get the point. You know what I mean? And so 3,800 with only executing at 20%, boy. Man. And this is only on one 200K account. Don't let me get back up to that 1.6 million that I had. Don't let me do it because it's going to be dangerous. And that's why I want to make sure I'm with a firm that's going to pay out. Because we are going to be very, very lethal here at For the Culture FX. We're training assassins, market assassins. It's just every time you get on the markets, you just kill the markets. That's what I'm looking for. You know what I'm saying? That's what I'm striving for us to be. And it's going to come down with executing within that 80 and 90 percentile. And that's just what it is. So I appreciate each and every one of you for tapping in. You guys constantly continue to show up each day. You're not just showing up for me, you're showing up for yourselves. And that is a victory in and of itself. And I want you to continue along with those small 1% victories in the day. And before you do anything, make sure you thank God for allowing you the opportunity to get 1% better, because we have this opportunity and a lot of people don't know about it. That's why I started For the Culture FX. A lot of people don't know about it. So to even be able to have the understanding that this is a thing that you can do, the future is so bullish for you. Like, it is so bullish, and it is a absolute blessing to be able to do this, because just 4 years ago I was in a much different position. I didn't know what I was going to do with my life. I didn't know where I was going to go. I just knew that I wanted to be successful. I didn't even know what successful meant. But in 2020 I wrote down 10 goals to educate my friends and family on how to become financially successful, to build generational wealth, to form a team of investors. That was one of the things on there. Travel to 10 plus countries was on there. Buy my mom a house and buy my dad a truck was on there. There was a couple other, but I know the last thing was to thank God. The last thing that I had wrote on there was to thank God through it all. And that was before For the Culture FX. That was before I really even understood trading. Oh, it was one of the other ones was to expand into more businesses. So how my plan is going to work is, trading is the foundation of my monetary profits. And then that'll get expanded into other business endeavors, whether it be digital products, whether it be physical products, things of that nature. So it'll be a whole separate sector, something likely separate from For the Culture FX. Even though For the Culture FX is very lucrative in itself, the amount of different things and branches, areas that we can branch this to is limitless. But it all starts with the skill and being able to execute at that 80 percentile. But then the third one is real estate, putting the money in real estate. And for me, I just did it, which one was the most cost efficient and least cost of entry. So you got to already have a couple $1,000s to test products in the market. You got to be able to pay for ads and things of that nature. Real estate, you don't even have to get me started on how much you have to have in order to buy a real estate property that's going to be an investment property that you don't live in. Because in the US, if you don't live in it, you got to have like 25% of the upfront cost, knowing that it's going to be an initial investment. Now, there's some ways around it. You could get multi-family homes where you live in one unit and rent out the other unit, and you have your tenant pay the cost of whatever the mortgage is. Essentially, you live for free and you build some passive income, because as time goes on, that property is going to get more and more expensive because of inflation, and price of things just go up naturally through time. And so what you would be able to do from there is you can get a 3% loan on the house, and you would only have to pay 3%, around 3 to 5% for that there, if you actually live in it. But you have to live in it for a year. The only reason why I know all of this is because I got so many books over here that I need to read. But this book, if real estate is what you want to get into, this rental property and what does it say? Rental property investing. It's by Brandon Turner. He has a podcast that is called the something Pocket. The Bigger Pockets podcast. That's what it's called. The Bigger Pockets podcast. So this is a great book to read if you were looking into getting into real estate. Let me give you guys some more books. You want to become a better trader? You want to become more disciplined in your life and be better? Atomic Habits. That's the one you want to read there. You want to become a better leader? You want to be a better leader? Then I got the book for you somewhere. Where is it? It's not up here. Okay. Where's my book? Well, anyways, I would say The Secret, What Great Leaders Know and Do, The 360-Degree Leader, and How to Win Friends and Influence People. Those are 3 great books if you want to be a better leader. Also, if Atomic Habits isn't enough for you as far as discipline, The Power of Discipline. Great book, small book, so it's a short read. A lot of things that are mentioned in Atomic Habit are also mentioned in The Power of Discipline. You want to quit your job? The 4-Hour Work Week. Now, I'm going to be completely honest. I haven't read the 4-Hour Work Week yet. I've listened to it. I have not read it. The book that changed my life, and I have the whole series, the single book that changed my life, Rich Dad, Poor Dad, by Robert Kiyosaki. This opened up to my eyes that, there's a bigger system than just going to work. I knew that there was more. I knew people wasn't getting rich off of working at Walmart. None of the people at Walmart is rich. This book showed me that, investing, real estate, learning how to make your money work for you. This was the foundational principle for that. I also got another one because I found it at the thrift store for 25 cents. 25 cents to change your life. That's all it costs right there. And then this one is Before You Quit Your Job, a book about before you quit your job with Robert Kiyosaki. I also have another one of Robert Kiyosaki. He got the whole thing. I started reading this, didn't finish it yet, but Loopholes of the Rich. This is how the rich hide their money. It's not about making a lot of money. It's about keeping a lot of money. And the rich know how to keep their money. They keep more money than somebody, let's say somebody who makes 25 million plus. I just watched a video on this the other day. They keep more money or pay less in taxes than the average person who works, a job at $100,000 a year. They pay less than taxes. Somebody who's making 25 million, and why is because they know tax loopholes. In this book right here, like if you got real estate, there's some tax loopholes if you have real estate. You know, you can, I think it's like you can delay paying taxes on it if you sell the property. You could delay paying capital taxes on it, and it's mentioned in Rich Dad Poor Dad too. But you could delay paying taxes on your property if you sell, or capital gain taxes on a certain property if you buy a bigger property of either bigger, equal or bigger size. You delay on paying capital gains on that there. So with that money that you save from the capital gains, you can invest into more properties and more. The rich people love debt, and being able to work around debt and how to build, you know, good debt is essentially all about what, you know, Rich Dad Poor Dad is talking about. I got my $5 bill bookmark, you feel me? Because knowledge is power, and it's also money. So let me see another book. If you're having trouble understanding, you know, what you want to do, is start with why. And this was a decent book. I listened to it. I mean, it is basically the principles. Oh, this is The Secret that I was talking to you about. What this book right here tells you, that basically the best way to help people is to serve them, to serve people, to serve. It's all about your service. Is being a great leader is more so about how you can equip the people, get the right people to do for the right jobs, and lead them so that you guys can have in a way that you make it more successful. Whatever, being able to identify, you know, areas where they need to improve. So this book is about a girl. Her name is I forgot what her name is, but she works at some company, and she just got moved up to a higher role position in her company, and now she's in charge of a whole bunch of people. So the CEO of the company, he hosts like meetings, I guess you could say, scheduled meetings with certain higher up individuals. And these are like mentorship program meetings, you know, and how you can be a better leader in your own department. And he would ask her questions, and he would have, you know, a lesson for each session that they have. And she would take something from that session and go back and implement it in, you know, her work life. And she would see improvements on her team's productivity. And because, like, let's say, for instance, this is an example. He was like, say you have an employee that shows up late, been showing up late for the past 3 weeks or that past week and a half, you know, instead of disciplining that person, try to figure out what the why is. Maybe that person has something going on in their life, and then you can be able to accommodate, for one, understand where that person is coming from, because these people who work in our businesses and the work that are going to, because I'm going to eventually build up a team as well. You know, I already have a team that I trade with and look to grow with, but in terms of to be able to scale the business side of it, I'm just going to be needing team individuals. So this is managing people. Being able to manage people is much harder than managing a trade, you know, because people are human and they have emotions and they have things that's going on in their life. So essentially, instead of just, you know, jumping on them or saying something like that, figure out what it is, and then figure out a way that you could potentially help them or ease the circumstances so that they can be more productive in the area. There's a lot of lessons to be learned in here. Any other book that I recommend? Oh, the most important book. Out of all these books that I just showed you guys, there's one book that stands unrivaled. And you want to talk about being able to really change your life with this book? I'm going to show you. I'm going to show you the book that will literally, and I can 100% agree, or not agree, but I can 100% decree. That's what the word I'm going with. I couldn't think of the word I was trying to say. But that this book will, in fact, if you abide by it, will change your life. Boom. This right here. This is the key. This is all great. This is all great. So much value in all of these books. You're going to get, it's like each book is like having a millionaire mentor in your ear. They just telling you all the sauce. But this book will change your life. I'm not going to lie to you. Hey, don't trust me. Try it. You feel me? Try it for yourself. But in terms of books, and I got a whole bunch of other books up here. A lot of them I haven't read yet because they're long reads. Like you got The Intelligent Investor. It's just too fat for a brother. You can see that it got some water damage. I left it in my car, and when my car had a leak, a car that I used to have at least, it had a leak. The Power of Full Engagement. I read a little bit about this. You know, you see the sticky notes. I got some notes in there. It's about managing your energy and not your time is the most effective. So a lot of times we'll try to, let's say we want to work for 5 hours a day. Like, yo, I'm going to work for 5 hours a day. And then you work for 2 hours strong. And then the next 3 hours is kind of sloppy work, you know, because you're tired, droned out of it. And so it's talking about how to get the most efficient management out of your energy. You know, you're not always going to feel super energetic and stuff like that. So you got to, you know, understand how to manage that. I read a little bit about it. Nothing too crazy. Let's see. We got How to Make Money in Commercial Real Estate. This is another book that I think I got from the thrift that I didn't read yet. This is the book I'm currently reading. So Your Next Five Moves by Patrick Bet-David. This is basically saying the key moves that you got to do. And one thing that I took that's super important from this is he was talking about IBM. For those of you who don't know, IBM was like the computer company before, you know, the computer was really even a thing. That was back when it wasn't just something that you could put on your desk. It was something that had to be in a huge building and in a room, and it took a lot of people to operate. So IBM, what he said, when he was, I don't know if he talked to the CEO or he had listened to something the CEO had said. Nonetheless, the CEO has said before IBM could reach becoming $1 billion company, they had to execute as if they were $1 billion company. And that means doing all the things that they were supposed to do. So how do we become, you know, millionaire traders, or not millionaire, let's just say legendary traders in the market? We need to be able to execute at how legendary traders would execute. And how we would execute is by getting in that 80 to 90 percentile. You know, we have to do those things now. If you don't have an account, you're not trading. I don't have an account, whatever. There's things that you can do. Trade on a demo. Get the reps. The reps is what matters. The individual trade does not. The amount of money you made on the trade does not matter. It does not matter. Why? Because you're going to wake up and you're going to take a trade the next day. Or if you don't get one that day, you're going to wake up and in a grand of 5 years, you won't remember the one trade that you lost on one day on a demo account. You know what I'm saying? It's not important. All those reps are going to be good for abiding by the system and being able to apply the system. So get the reps in. Get the reps in. Act as if you're already a profitable trader. Act as if you're already a millionaire. How would the millionaire version of you act? The multi-millionaire version of me, the guy who creates the generational wealth, the guy who buys his mom a car or a house and his dad a car, the guy who forms the team of investors, that guy, he's smart. He's dialing into these books. He's soaking up the knowledge. He goes to the gym. He works out. He starts his morning off with a high volume, you know, workout session to get the blood pumping, to get the you know what I'm saying? Get it going. You got to get it going on. And so I'm trying to execute. And I made a video about it. Let's go to YouTube so that you guys can see. Where is the video? Oh, it's before. Here we go. And let's see. I'm gonna try to play it. If it let me play it. If it don't, then it don't. But the whole video is called wait. No, it's not playing the audio. But the whole video is about who do you want to become. And for me, it was about doing the things that I see my future self doing. You know, reading the Bible, going to the gym in the morning, getting these workouts in. You know, and then this is just a portion of me reflecting on things that I want to do. And then I get to explain in all of those, the high value version of myself that I see myself for the future. And that's what I'm chasing after. So today I'm not in the perfect position. I'm not where I want to be, but I'm making sure that I do something today that is going to get me closer to that person that I envision myself. I want to be a leader, not only to you guys, but be a leader to my family, to be able to have, to set that right example for my future kids when I have them. You know what I'm saying? To be able to do these certain things, and then to have the freedom. Trading gives us the time freedom to be able to develop my family, to spend time with them, to do certain things. I'll have blocked out times where we do X, Y, and Z, and I won't be working all the time. But right now, while I'm young, I'm 24. You know what I'm saying? No kids. I mean, I got a dog, but you know what I'm saying? No true responsibilities. We got to get it. Let's get it. Let's go. And it doesn't matter what age you're at. I know multi-million-dollar traders who didn't start trading until their mid and late 30s, and it just takes time. And even 30s is not late. Even if you started trading, I know a trader who started at 56. I think Sanjay is a trader in Poland. He owns a bakery. Very, very cool dude, Sanjay there. And so it's just, you just got to get it. You got to get it, got to go however you can. Tomorrow's not promised, so whatever you can do today, get it done. So that's what I'm going to wrap you up with, and I'll see you guys for tomorrow's stream. Definitely stayed on later than what we normally do, but all this stuff was important. So I'll see you guys.